business owner, the entrepreneur, the aspiring entrepreneurs, the commissioned salespeople. Oh my goodness, business professionals in every field. It has you in mind. So we have a number of opportunities here with Atlanta for Success for you to participate, starting with our free, revolutionary, I will say that, online networking at its best, next level networking, where you get a chance to have 30 seconds to pitch who you are. Oh my goodness, how many times have you been to an event and you haven't got a chance to say a word to maybe two or three people that you've seen in the hallway? But we're bringing it to you through Zoom, beautiful platform here that we're using, reaching people globally. And then, of course, we have expanded opportunities with membership. Now, what does that look like, membership? Well, right now, I have one of our members. He's a lifetime member. We actually do a lot of these things where we're featuring our members. They get interviews, they get marketing and posts that are created through our head of marketing, Samantha Glass, and we post it through all of our mediums of social media that we have available. And my goodness, I mean, Pierre Galon, do you realize how much you paid for the membership, right? You thought that was a mistake, probably, correct?
No, I see a good, when I see a good deal, I don't hesitate.
And as a CEO, someone who is the guru of financing, you know value, correct?
Absolutely.
Yes, perfect. And then, of course, the next way that people can participate with us as well is being a co-author in our upcoming Land for Success book, because we really believe that everyone has Land for Success in whatever that looks like to you, whether it's moving from province to province, whether it's starting all over, whether it's reinventing yourself with a career, actually coming through any type of adversity and being in your optimal job, career, business, all kinds of things. So, take a look at our website, www.landforsuccess.com. And now I want to introduce Mr. Pierre Gallant. We had a little casual conversation with him just a few minutes here before we came live. But this gentleman here, sometimes I get emotional because in my lifetime, meeting someone with your accolades and experience and wisdom, we don't get a lot of personal, up close and personal conversations.
Right.
He is the CEO of Complete CU Services. He's the founder of Market to Market. This gentleman is a husband, a finance guru, helping people all over the world. He's a loving husband, and he's got twin boys, and he still finds time to help people get to the next level in their business. And one thing that's really beautiful is that when you come across someone like him, it doesn't matter. He lets you forget all of the acronyms behind his name because he's just so humble. He has a big heart, and he's totally in alignment with everything that Atlanta for Success embodies. Big heart with you in mind. So without further ado, Mr. Jean-Pierre Gallant, please share with the good people what they're going to be expecting today from you.
Well, thank you for that amazing introduction. Where were you when I was I was struggling through high school and college and university to tell that to my teachers.
Let's
Yeah,
write a letter to them after this show.
right on. So today we'll be talking about business structures, what type of business structures you can adhere to. It's either you're currently an entrepreneur or a business person, and you want to change the structure, so it'll give you an idea. Or for the new business entrepreneurs that are thinking about opening a company, this will give you a little bit of background. And subsequent to that, we'll be looking at a really, I don't know how you could put this interesting, but it's financial ratios that financial institutions look at when they're looking at financing your business.
Yes. So everybody grab your pen and paper, because you know already your girl Tammy, she has hers. Pen and
Yeah.
paper. We'll give you a couple of seconds, 10 seconds on the clock. Pen and paper, and get ready. Have your coffee, have your tea, have your snack, whatever it is, and let's just kick back here. We got about 30 minutes. All right, let's go, Mr. Gallant.
All right. So here we go. All right, Tammy, just confirm that you can see the presentation.
I can see, and it's not because I have on glasses.
Fantastic. Okay, so I'm just going to hide this here. All right. So, Complete CU Services, as mentioned, one-stop shop for businesses, business solutions. We do audits and consulting work. Before we start the presentation, just wanted to put the legal content of this presentation is protected under Canadian intellectual property, Copyright Act registration 1168379, exception for stock images and photos, as well as social media data global slapshot report created in partnership with Hootsuite.
Okay.
So just a little bit of we were mentioning last week, we had market to market. We were talking about digital transformation. Did you know that there were 3.96 billion people that are on social media, which is more, this is a statistic from July 2020, which means that more than half of the population of the world uses social media.
Wow.
So with that in mind, what do you think the opportunity is to do advertisement rather than traditional? And I'm not putting down traditional advertisement or marketing, but this is one of the mediums where it's not a TV show. It's not, this is what people use on average 4 to 6 hours a day. So it's really the first time in history where you have this much attention on various social media platforms. So I'm just saying that because we are at the end of the month, or starting the first week of November, starting the 9th of November, we're doing social media marketing private training, flexible to your schedule. So it's 4 1.5-hour courses starting November 9th.
Okay.
We've got 2 people that will be attributed to the entrepreneur or the business. We're going to give you step-by-step online coaching to promote your business on social media. We're going to, do it for your industry, identify your target audience, create your buyer persona or your ideal client, utilizing social media and social media strategy. So all that for small price of $375.
Wow.
So,
and that's 4 sessions? 4 sessions? Wow. Okay.
1.5 hours. So please contact us at info@completecuservices.com or call Erika Aguilar at 1-289-828-2648. I'm sorry, that's my phone number, but that's all right. I'll answer for her. So just, let us know. It's really something that is, I must say, is very inexpensive for the time that you'll be doing. And usually we charge a lot more. So please register now. All right. So today, as mentioned, we're going to be talking about business structure, financial ratios, the type of business structures, and bank ratios for loan approvals. So let's get started. All right. Business structure and financial ratios. So the first thing I would venture to say, there's a lot of individuals that that help out this type of process, but it's important that when you do get the information that you want to, you want to get the additional details to verify with Canada Revenue Agency. This is for Canada, or anywhere in the States as IRS, in Europe, particular to your country. Go to the register, or just Google or whatever browser you're using. Just indicate a business structure in whatever your country is, and try to find the government website, because, and I'm not saying, but you may get some information. Like sometimes if you Google that in Canada or whatever browser you're using, you may get information from the US, and it might not be information that's the regulatory way of doing things in your own country. So in Canada, and as well as most countries in the world, it's pretty much structured the same way. Sole proprietorships, that is an individual. Go into those in detail. Partnerships, corporations, cooperatives, and nonprofit. In Canada, noted, no matter what type of company structure, you always need a registration number to open the company. And you're going to be solicited by CRA, which is the Canada Revenue Agency, to get that number, because they don't want you to forget their taxes.
I have a question too, Mr. Gallant. How do you feel about some of the sites that I have seen where you go to register, and they say that if you do your registration through them, it's not a government site, they've kind of paired up something with Royal Bank that you will get like $300 or something. Is that like real? Because I didn't do it, but
well,
I've been just privy to that for a couple of people that are entrepreneurs, and I'm similar to you. I'd rather go to the actual official site, but some of these other sites are offering business plans online, and then they're also offering something else if you register right there on their site.
Yeah, I would always caution, you have to be careful, because sometimes it's an easy way to capture individuals and
oh my goodness,
personal information. But
yes,
again, that's just a caution, and that has nothing to do. A lot of what happens, even when you're going onto the government website,
yes,
there's an offer to open a company there.
yes.
So it's an independent party, which I don't, I don't want to criticize, but it's part of the government website, but then they send you to a third party. And when I've done it a couple of times for myself and for clients that wanted to open different holding companies. And what seems to happen is that you can shop around, and I'm thinking of an individual that I'll mention, Marcel Winter, who has her own company, and she does this type of work. But what the government website will automatically bring you to a third party that will register a company, but they'll charge you, and it's not always the best price, and you don't get maybe some suggestions or what to do exactly. So in terms of financial institutions, obviously, if you go through that, which is a link that'll bring you to the RBC in this case, or whatever bank website, well, then you automatically become a client. So for them, it's a marketing, right?
Yes.
And it's, it's very, very smart marketing because it's using AI as and it's growing their business. And it just depends on you. But I would just caution that when you're starting to, not that, I'm not criticizing, but just to make sure that the links are actually to that financial institution
Yes.
and not to, some other. So just make sure that when you go to any RBC, CIBC, TD link, that you go first to their main website and see if they're offering that same type of product.
Thank you. Thank you for that.
Yeah. So sole proprietorships is really owner occupied rentals as an example. So you own a house and you're renting out some rooms, barbers, local services, house cleaning, direct sales affiliates, taxi driver or Uber driver, depending on the structure of the taxi company. So sole proprietorships have a lot of advantages in the sense that it's the easiest and most inexpensive to set up. The owner solely controls the business, and it's not really maybe if it's a family ownership, but mostly like the father and the son, or the father or the mother and the son, or the mother and the daughter, whatever. But usually when sole proprietorships are one man, one woman show. The tax reporting is very simple because it's part of your own taxes. So as an example, your revenues are, let's say, I don't know, $20,000 a year minus your expenses, and then you have a deduction, etc. But then your net revenues are going to be whatever after expenses. So it makes it very easy. You just fill out one tax, your income tax. The disadvantages, however, are that it's unlimited personal liability, as there's no separation between the business and the owner. So in other words, if I run into problems and I own, I'm doing some maintenance work or whatever it is,
yes,
and I, something happens and I get sued, or I'm not paying my bills because the business is not going well. Well, a creditor could go into your, seize your house because everything is personal. So there's no distinction, even though you're going to call it maybe a different name because you're not registered or not incorporated. You have that, I guess, that disadvantage. It can be hard to raise capital. So, I mean, it's basically reserve. I wouldn't say reserved, but it's more of a structure if you're not really going to try to raise capital or make it a big enterprise. It's really for, as I mentioned, a small shop or a family business. And I guess one of the other disadvantages is that it's very difficult to sell that type of business because if you're doing businesses, there's no legal entity. So you can't really say, okay, well, I'm going to sell Pierre Gallant's business, but in reality, there's no entity. So people could just take over the clientele without, paying me the money. I mean, obviously you can get into legal battles, but it's not structured for
that.
Partnerships. So partnerships are usually service industries such as lawyers, accountants, or medical clinic professionals. The partnership advantages is that if you're several lawyers or several dentists, let's say, you're sharing the risk. There's shared management responsibilities. The tax reporting is simple. Doesn't require a separate corporate tax return. But you know, you have to be careful because there's a lot of disadvantages in the sense of risk of conflict between partners. This occurs like, you know, you start off a business and everything's going great, but then when things, you know, kind of get sour, then you're still 50-50. So in other words, if you're three dentists and one of the dentists doesn't work that hard, it's the business model, right? So you can,
Yes.
you know, and then if you decide to get rid of that particular partner, then, you know, it has to be shared 33.3, you know, across the board. So it makes it, you know, sometimes it's difficult. Shared decision making, buyouts can be problematic. One of the partner wishes to keep the business, the other two want to quit, so they just want to sell the whole thing. And then you know, so the current partner will say, well, you can give me a better price. It just, sometimes it's not the best, but
Yeah.
it works for different models.
Different models. Do
Yeah.
you have suggestions? Do you say it's ideal for the medical industry? Is that what you were suggesting?
I'm not suggesting anything.
No. Oh, that's right. This is being taped. Sorry about that.
This is what
So,
no, it's just that most partnerships are either lawyers, accountants, and medical
and
clinic,
medical, okay.
right? So it's typical to that
To
type of
those industries, okay. Good.
professionals do that.
Okay.
And there's also some, you know, some legal and sometimes some tax benefits of doing it that way.
Yeah.
You know, it's because you're also, the expenses are on your person, right? So
Mm-hmm.
it's easier to show personal expenses that are included in your professional revenues.
Okay.
This is the most popular, really, is the corporation or the incorporation. So most companies, regardless of the industry, public or private, franchises or holding companies. So the corporation's advantage is that there's limited liability. So such as you know, Complete CU Services, we're a corporation, and I have errors and omission insurance. But if ever somebody were to, you know, try to bring me to court or has litigation against me, it's limited to my company, so I can, you know, it doesn't touch upon my personal assets unless, you know, I go to the bank and contract a loan and I sign over a personal guarantee.
Okay.
It's easier to raise capital from investors or financial institutions. All the stock market listed companies are, you know, corporations. Being incorporated is often a requirement when doing business with governments or other businesses. And it's more respected. I think
Yes.
it's more, you know, it's more of a, I guess, I don't know, it's more of a legal structure that is binding. So there's two companies that are dealing with two companies rather than one company dealing with sole proprietorship. So business income can be paid out. This is a very good advantage. You can pay dividends. So your taxes, so if you're declaring dividends instead of a T4 revenue from a company, you get in tax benefits, but it's not ideal for, let's say, the COVID-19, where, you know, I declared dividends to pay my salary, but then it didn't allow me to apply my salary expenses to qualify for a COVID-19 loan.
Oh,
so,
boy.
yeah.
And you know what, speaking of legal, we have some viewers here, and Samantha Glass is here. Erika Aguilar is here. And so is Kelly Chasson. And Samantha Glass is running one of the largest paralegal firms in Toronto. And she echoes your statement. She has a comment here, quite a few actually, but she says the agreement needs to address all the what is included. If there is a disagreement, where will it go? Arbitration, mediation, or litigation. Agreeing ahead of time can save you tons of money. And she said this is a great topic. So she's saying thank you so much for sharing this.
I totally agree with Samantha. You got to get a shotgun agreement, which means like, okay, your partner, even no matter what the structure, but mostly in partnerships, but
yes,
if you don't agree beforehand, you know, things can happen. If you're only two in an incorporation, the same type of thing can happen.
mm-hmm.
Like when, you know, nothing to do with my previous partner. However, he was in a different stage of life. So, you know, we had a very, very good partnership, and he was very, you know, excellent in terms of, you know, left me the company when he retired, but it could have been, you know, you know, and you owe me 50% of the profits you're going to make, right? So
Right.
you have to, you know, everything is great until that happens, and depending on the financial situation of the person when they retire, they may say, well, you know what, I had all this money in the stock market, but then when COVID-19 hit, I lost all my resources, so I need to survive, and then it causes like conflict, and then, well, then you can hire Samantha.
Yes, exactly. Samantha Glass. And we'll make sure to put her contact information in there. She comes highly recommended amongst everybody. She's a mentor as well. We should be spotlighting her in an upcoming series as well for all of her legal advice that she gives and counsel.
Right, again, right, exactly. So disadvantages, it's expensive, but you know what? It's not that expensive. You know,
Yes.
you can, you know, you should check around, but it doesn't cost that much. I agree again with Samantha. You know, if you get a lawyer to do this, you know, document the minutes, and then you can also, which is a really good point, is when you document things in the minutes, it also, so let's say that in my company, everybody must wear a suit when they go, you know, to visit their clients, or you know, and then you can put a policy in to say, okay, well, you know, all expenses for suits limited to, you know, $1,000 a year can be deducted, and you can kind of design what are the needs and what are the expenses that you're allowed to
Yes.
and this also helps the accountant, and sometimes accountants will, you know, suggest that you do certain things. Anyway, so it's important to get the legal paperwork, you know, 100%, because when it
Yes.
starts out, everybody's on board, but then when it starts making money, and then some people want to get out, they want to get out at the wrong time. Anyway.
Yes. Where are we at for time? Let me take a look.
Yeah.
12:33. And let me see if we have any other comments or questions here. Oh yeah, Samantha Glass says corporate veil is not absolute, so it's not full legal protection. She also says have a well-drafted partnership agreement and exit clause. Yep, similar to what you're saying. So she's fully in alignment with what you're saying. Amazing to have her participate and echo what you're saying. I mean, wow, two minds. Beautiful.
Yeah, exactly. Well, thank you. Thank you, Samantha. The other thing is, yeah, you must file a corporate tax return, but it's not, I mean, you can hire an accountant if it gets really complex, but
Yes.
you know, you can do it yourself. It's not over. I think there's more advantages, definitely a lot more advantages in a incorporation than there is in any other structure.
Okay.
Next is the cooperatives. So cooperatives are mainly credit union, insurance cooperatives, housing cooperatives. A lot of the agriculture industry, farmers, and those type of cooperatives, dairy cooperatives. It's all a type of united kind of of membership. So you're it's like a Costco, but not really. So
Okay.
Costco, you are a member, but it's more of a capitalistic thing. But they do share any profits at the end of the year. So it's the same thing in credit unions and these others. It's more of a this started out actually in Quebec of all, I mean, in Canada. It started out in Quebec with Desjardins in the 1800s, where
Yes.
people got together and they raised money, and then they would distribute the profits to the people that invested. So originally, the finances of a financial institution or a credit union was through the membership, and that's changed over the years. There's limited liability. The disadvantages is that decision making can be slow. There's a risk of conflict between members. I've seen that a lot in housing cooperatives. Um, if you want to do something or you want to sell your property, it has to go through a whole rigmarole. Anyway, but it's credit union industry is worldwide, right? So
Yes.
it's a different model. So finally, the nonprofit, well, it's non-business, churches, charities. I just listed here the top 10 in Canada.
Okay.
So normally they have employees. As you can see, the first one, World Vision Canada. So they issued $247 million of receipts, tax receipts. Their revenues were $445 million, and that was in 2016. So their assets are $71 million, but they had to pay 477 staff members. So even though it's a nonprofit, the larger ones, they have to pay their employees. I was surprised to see the way that it was structured. I had no idea that World Vision would be number
Yeah.
one. But this is only for Canada, so it doesn't include different charities that are built that that wouldn't be included.
Wow.
So for non-incorporated borrowers, so if you go to the bank and you're looking to get finance, small business lenders might, it's not 100%, but they might use traditional retail lending ratios. But here's the issue when you're not incorporated. So, so as a sole proprietor or even a partnership, they're going to include all of your personal debts when they're calculating a loan for your business. So, so in other words, if you're familiar with mortgage lending, these are the CMHC retail ratios. So gross debt service ratio means all the debts that you need to pay just to live in a dwelling. So I apologize, the line here kind of went down. It's supposed to be the division line, but you can see I was not very good in math, right? So I put the division line totally elsewhere. Anyway.
So there's hope for someone like me then. There's hope for someone like me.
Definitely.
Thank you. I need that.
So the gross debt service is principal of your mortgage or your rent, plus interest on the mortgage, plus taxes, plus heating costs, divided by your annual income. In addition to that, the total debt service is principal, interest, taxes, heat, and other debt obligations, so car loans, etc., and may also include whatever loans that you have in your business. Now, here's the catch. So if you're declaring a lot of expenses on your business, well, you may be penalized because that's divided by your annual income. And some of that you can kind of discuss with the lender to say, you know, I'm taking it out here, but you know, chances are it might be a difficult situation.
Yes.
So in terms of commercial lending, so what they will generally use are these ratios. There's multitude of ratios, but I just took, you know, the ones that were most common to simplify, because I know we don't have 3 days to discuss all the different types of ratios. So loan to value, debt service coverage, and debt to equity. So here's loan to value.
Yes.
Is the ratio that is requested for the loan amount. So basically, if we look at, if I have $100,000 of accounts receivable, so these are, you know, it could be real estate, it could be inventory, it could be different assets, but here are the most common. So when we're doing operational lines of credits, what the banks will be looking at, let's say you want to finance your accounts receivable. So the bank wants to make sure that your line of credit will be fluctuating. So what they'll do is they'll finance 75% of your accounts receivables minus your 90 days that, you know, so whatever's not been paid in the first 90 days, then they'll exclude it. So if I have $100,000 in accounts receivable, they're going to finance 75% of that, so 75,000. But I have a $10,000 account receivable that has been due for 97 days. They're going to take $10,000 off, and they're going to say, "Hey, PJ, you owe us $10,000. So, you know, what are you going to do to reimburse us?"
Wow.
Inventory is another, you know, banks don't like financing inventory, but, you know, they do that. Usually it's 50%, depending on what it is. I remember when I was an account manager, we were financing gold because there was a very huge production jewelry company, but we were only financing 50% of gold. And the reason why is that it's very difficult to track, you know, those things. But usually that's the ratio for inventory, no matter what. If it's widgets, and most of the time, you know, if a company goes bankrupt, these accounts receivables and inventory are usually, you know, you get maybe 10 cents to the dollar. That's why usually banks will take personal guarantees, because they want to make sure that, you know, once, if ever that would happen, that scenario would happen, that they have something else to get. Real estate.
Okay. I have a, there's a couple of questions here before you get to the next one. Samantha Glass is asking, do you draft business plans to assist with the financing?
Yeah, it's you know what, absolutely, we can do that. And the thing is that all of the steps that we looked through, episode 1, 2, 3, 4, and next one will be 5.
Yes.
These are all steps that you need to have in your business plan. So yes, Samantha, thank you very much for adding that. But if you want to do it yourself, which you know, there's no problem there, make sure that you follow those steps, because those, you can have great numbers, but really when it comes down to commercial lending, unlike retail lending, it's less mathematics and it's more about what the entrepreneur is able to do. So I've been lucky to go through this type of industry.
Yes.
And we would meet individuals that are, you know, very, very smart, have great ideas, but they're inventors and they don't have any marketing strategy. They don't have that. They're very good at what they do, but they need, you know, a partner to help them market their idea. Sometimes you see that a lot on Dragon's Den or those, you know, they're brilliant people.
Brilliant.
but they can't even price their service or their
Yeah.
product. And it's sometimes very sad. It's like, you know what, you really have to get that exactly. Like Dragon's Den is kind of a good an educational way to see what the banker. Well, they take a lot more risk because they're
Yes.
partners, but it's kind of the same structure, right? You got to make sure you got a strategy in place, because the first question they're going to say, Tammy, you've got a great restaurant idea. Well, you know, the banks aren't really hot on restaurants, but what's going to make your restaurant different than the others? Oh, well, I serve this and that. Well, how are you going to make that known? Like, do you have a following? Are people following you? So you can't, you know, you gotta research, do a lot of, you know, thinking, analysis.
And that
And
brings me to a question.
yeah,
Because things have changed to much more online, uh, do you see that, like, the banks now looking at those things you just said about the following? Because I just know an individual I was working with last week who was applying for a grant, and they asked a lot of questions in that grant on what their social media presence was. And
absolutely.
so this is like, so now this is a bigger thing than ever before.
Absolutely. So social media today, even like 6 months ago,
Yeah.
right? Sorry.
Yeah, 6 months ago, my
Yeah,
goodness.
6 or 7 months ago. I can't do math very well either. So,
There's
um,
hope for all of us.
yeah. So basically, you're bang on. A lot of my customers are credit unions, right? So
Okay.
so it wasn't an issue to lend money to a restaurant. It wasn't an issue to lend money to well, farmers are, you know, the best industry to be in 2020. But my God, they've suffered in the past, right? They had to,
Yes.
you know, couldn't meet their quotas, this and that, whatever. But that's the need right now. You're everybody's needs have, you know, have changed. I used to have a particular type of yogurt and you know, particular type of orange juice that I wanted when I went to the supermarket. Well, after, you know, their shelves are empty, or my toilet paper.
Oh
You know,
my
shelves are
goodness.
empty. You don't care. You just want the
Uh,
product, right? You don't care. And you kind of adjust your taste buds and get rid of those psychological barriers where you're
yeah.
like, okay, well, I have to have this one.
Yeah, napkins were also like, the lunch napkins, even that was empty.
Oh my God. I mean, we're
It was
using
crazy.
napkins today. We used to use paper towels, and now, you know, we got napkins going, and we're looking for things. And the other day we were looking for toilet paper again, you know. We have a house of 5 people, and
Oh
we're
gosh,
looking for
same with
toilet
us.
paper, and we're going, okay, let's ration, guys. So anyway, all that to say, if you had toilet paper in the past and you were a toilet paper company, you're doing well today. But there's certain things, if you're a restaurant and you had no social media, you were the best French fry place or poutine place
Yes.
in the city, and but you have no social media presence, and you don't do any deliveries through Uber or whatever, you're dead, right? So unfortunately, or you're gonna have a lot of challenges in the next couple of months.
Mm-hmm.
So all of the thing is, Tammy, social media is
Yes.
is the future. So if you're like I said last week, if you have Decathlon, which is a huge French sporting store that's installing itself not far away in a mall, and I'm like, okay, I'm not a strategist. Maybe they analyzed it, but now that you can order, that people have actually attempted, that were scared to order stuff online before, like myself. Not that I was scared, but it wasn't in my habits, because I needed to, to try on clothes before I bought it. But I bought
Yeah.
a pair of jeans for the first time in my life through, I won't mention the company, but I
Yeah,
ordered.
because they're not paying you and you don't work for free.
Exactly, exactly. If you want to pay me, mention the name of the company,
Reach out to him.
right?
I'll put his coordinates there for you.
Yeah, and I just say that it starts with the letter of my last name. So, anyway, um,
Oh,
and
that was two. Oh, actually, no, that could be quite a few. Wow, you got
it
high
only
taste.
has 3 letters.
You've got high taste there.
Yeah. No, 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 it's nice. Anyway, so basically, I ordered some jeans and they were fine, right? Because
Yeah,
I don't know why, but I thought, okay, well, you have to. I've been the same, pretty much the same size all my life, so I know
yeah,
what fits me, especially like shoes. Shoes, I still need to walk around with them, but I'm gonna buy them anyway if I like
yeah.
the way they look. So all that to say is that social media is so important right now,
Important.
and the generations are not getting uh, older, right? So what I mean by that is that the Gen Xers, the baby boomers, and millennials, and now the Gen Zers are all on social media. So what this did, this pandemic, just shifted all of retail. So there's only a few things that you can't get online. You can't go to the dentist online yet,
Not
but
yet.
I saw mobile
I see
dentists.
mobile. Yeah,
Yeah, exactly. Home to home, right? And that's, what is this going to have an impact on the future of our social abilities? Is it going to be, it could be positive, it could be negative. I'm not going to comment on that, but the less you go out and socialize, the less that you buy and purchase, but the purchase online is at the end of your fingertips. So
this is really cool. This is really cool because I think it will give people a lot more confidence as to when they present themselves to a bank for finances. Some people have like, oh my gosh, like 500,000 followers on Twitter and all these subscribers on their YouTube. And now they want to take whatever they've been doing and turn that into a business. So it's really nice to know that that is really property and it really is an asset and it can be looked at that way from the bank. So thank you for sharing that. So everybody, listen, if you're not, I'm going to just plug this right now, because if you're in business and you're not a part of Landed for Success, you're missing out huge. We're doing things behind the scenes to optimize our website where you get to piggyback off all of the activity that's being happening right now just by being a member on the website. Now, I'm from the website kind of internet kind of advertising space, and I know firsthand that if you just put a website out there yourself, you're going to be lucky if 20 people visit your website. They always say, I think Kelly Chanson has a nice quote. You can go alone, but you can't grow. You can't grow alone. Something like that. It's someone to think, but you need a team. You need a whole team. You need to be using all the resources available to you. I will get the proper quote from Kelly Chanson. But yeah, plug into Landed for Success, become a member. It's a global platform. We have like 14,000 people on a Facebook group. You're hearing someone here who's documented CEO, a master of finances, sharing so much information. If he sees the value of being a member and sharing his expertise, I think you want to take a look at this again. So yeah, I'm sorry, because social media, like you can't even get your own following. You put a Facebook page up, Mr.
and,
Gallant, and
and
you're
you're
lucky if you get like 20, 40 people right away. You
right,
have to go
right.
around. So how can you actually grow your own network and also your social media space? You
Yeah,
need a
and
team.
I think the biggest mistake is that people will go on social media without targeting a market. So you can
Exactly.
get a lot of hits, right? Like, one of our videos went out, crazy. You got 26,000 views. But
Yeah.
but is that relevant? There's some in South America. Is that going to generate any? Half of the population that was listening to the video don't understand English, so it doesn't mean anything in terms of that. For me, it was more exposure, and you know what? The more I can promote myself and promote our business and promote Landed for Success. However, it's important really to target your market, and you have to have a budget and you have to have a strategy. You can't just go out on social media. And believe me, as Tammy says, if you put out a video on YouTube, you're going to get, if you're lucky and you send it to all your friends,
Yeah.
you're going to get maybe 20 views.
Yeah. What
So
about subscribers? Your friends sometimes don't even subscribe to your own videos.
yeah,
But you know,
that doesn't happen
you
either.
bring, yeah, you bring something really to head here and really to light when you talk about the social media aspect of it, and especially exposure. You know, it's important to know that exposure is where it's at. So if 20 people are seeing your information, it's not enough. Need more eyeballs on it.
Right.
I used to
And
always
you
do
have to
that.
figure out too, who's your
Your target audience.
target audience and your client, right? So when you have your ideal client, okay, first of all, for me, if I were on TikTok or if I were on YouTube, I am on YouTube, but YouTube is not speaking to the my potential client. I mean, we're
Who
not
is your
there.
ideal client anyways? Because Samantha Glass had asked that earlier. What type of clients do you actually serve best?
Anybody who has a company, anybody, our main bread and butter is the financial institutions. But we also do, consulting for all types of industries, any large corporation or small, medium.
So pretty much anyone that has a business or aspiring to have a business, correct?
Yes, but smaller, startups
Mm-hmm.
is really not really our market, but
Yes.
we can help them out in any way, shape, or form. It's just that uh, our usual market is B2B, so it's credit unions to us, financial institutions, foreign
Okay.
banks,
Yeah.
and a lot of their clientele, or wealth management, that they want to do due diligence for another corporation that we can do. We've got so much experience. I was thinking next week to maybe present a few of them, but all of our contractors have been working in financial services for over 30 years, such as myself. So we're all surrounding ourselves, and I'm not talking about, I don't have I fell into internal audit. I fell into consulting because I started out as a teller. I started out in the field, and worked my way up to being compliance officer for 5 provinces, doing being in charge of internal audit departments in various institutions.
Yes.
So that came, but it's not like. As I mentioned so many times before, I always respect individuals that have experience,
Yes.
that have lived through a certain process rather than have learned the theory. So you can take. I remember when I did my MBA, I was quite a few years. I did it at night and at weekends, and I was taking a marketing class. And I was just sitting there and I'm going, what is this? And I could not wrap my head around. It was all theory. It had nothing to do with, I had been maybe 12 years in the bank at that time. It had nothing to do with what I had seen. So
Mm-hmm.
I'm not saying that it's good, bad, or whatever, but those theories, those strategic plans that you see, you can have a cookie cutter approach, but if you don't know how to identify who your target client is, then it's all out the door.
It's
And
out the door.
that happens a lot. And unfortunately, it's you grow with your demographics. So what kind of what we said in the beginning in business risk is that I'm a guy from Gen X. Yeah, that's right.
We're
Just
at the top of the hour here now. 1 o'clock, kick it in.
Okay. Okay. So I'll be quick.
So we're finishing up here now, sir. But go ahead. I don't want to have you
Yeah. So
stop
we
because
just,
just want to
you
give
know,
you an eye on time for you.
yeah, you're just comfortable with your generation, so you're not going to be, uh, you're going to be more. You're going to be more challenged to look at individuals that are younger or that are in the younger generation. But if you stick to your mindset in your generation, you're burnt. Like there's no way that you can
Yeah.
continue that way. So you have to grow and evolve with whatever's around you, and you have to adapt. And it's not easy. It's not easy. Anyway, here we'll go into the debt service coverage ratio. So here's a very important ratio for the banks or financial institutions. And what it basically means in this example is your net income pre-tax. So if you're making $500,000 pre-tax, plus the interest that you've already paid out, plus depreciation, which is basically depreciation is just money that is an expense, but it hasn't gone out the door, as well as amortization. So you get your EBITDA, which is basically the cash flow that came into your hands in the company. Then you've got to pay off the interest expense and principal payments, and your total is $800,000. So your debt service coverage ratio in this example is 1.03, which means you have $1.03 to pay off $1 of debt. That does not work. Banking institutions will usually, depending on the industry, have, I'd say about 95% of the time, $1.25 for every dollar of debt. So in this particular example, they would have to see what other alternative they could do. But it's very important to understand that net, you have to be making $1.25 for every dollar of debt that you think you want to borrow.
Wow. Okay.
And debt to equity ratio is very easy. It's just dividing the total liabilities by the shareholder equity. We'll look at financial statements next week, but basically it's kind of like the debts that PJ has in terms of loans, et cetera, and my equity, which would be my net worth. If I have 2 times the debt, then that's acceptable to a bank. As soon as you get into 2.5, 3, you're probably going to have to go, find an alternative lender. But that is not applicable to commercial real estate. This is strictly for, or most likely for asset lending, such as accounts receivable, inventory, et cetera. So again, if you have any questions, please don't hesitate to contact us. Next week, we'll be doing October 19th. What type of credit facilities and financing resources are available, and
people have been asking about this to me a couple of times. When is that coming?
Right.
So mark your calendars, everybody.
And finally, I'm coming back to the social media marketing
yes.
that we're giving. And please register now and get in touch with us. And we'll do our best to accommodate you with your schedule. Only $375. It's really worth it.
And the crowd goes,
thank you. Thank you.
So much value on that session that you're offering. I've known several people, and even myself, paying a couple $100 or more for consultations. And even though we learned something, but it wasn't designed for us to learn something. If that makes sense. So what you're offering there is huge value.
Yeah, and what we decided to do is that we took out the general class, because you know what, everybody is going to be there. We want to try it out. you know, if we can get some, but I think everybody really needs like hands-on one-to-one.
Mhm.
Okay, but we want, so before you even start, you know, the training, we're going to ask you a couple of questions about your business, what type, you know, what your thoughts are, because you know, I don't want to invent stuff, but
Yeah.
try to see what you're doing right now, what type of industry you are, and then we'll work with that, and then we'll say, okay, you're not gonna, you know, if it's me, like again, I'm not gonna go on TikTok. I could, but it's not gonna be
Yeah.
the type of clients that are gonna, you know.
So you know what we should do after we do your last series, last part of the series next week. You and I should schedule some other time as an introduction to let people kind of know what they can expect. Because I find that repetition is the mother of all learning, but more than that, um, information. We're living in a world now where we're getting things at such lightning speed that I find that sometimes people need to hear it, need to see it, need to hear it over and over and over before it sinks in and says, oh my goodness, okay, this is exactly what I need. So yeah, we should do something like that. I did get the quote. I was saying it properly, so that's great. So Samantha Glass put it in here for me. Anyone can go alone, but no one can grow alone.
Right.
Kelly McDermott Chason, that's her quote. And it just makes me want to just say that towards the end here, because Leonard for Success, that's what we're all about, bringing people in business together and growing and helping each other. Even Gordon So, one of the co-founders, has said that, you don't just go to an event once and think that everything's going to happen. It's like going to the gym. You're in there for 3 hours and you're worked out. Did you lose weight? Probably not. So you just keep going at it. Everything is all on consistency, being committed. And once you experience what this is all about, you're definitely going to find something here for you. The value, I mean, from being a member myself and blog writing and being interviewed, you sometimes you actually have to pay to be interviewed. So
Right.
how cool is it as a member, $100 lifetime membership for the first 200? We're almost at that number. So if you haven't decided, you better decide soon that you can have a mini series similar to what Mr. Gallant has actually created here and be exposed to all kinds of individuals. The best thing about this is that you get to use this for your own marketing for future. So it's just amazing. So I'm so happy that you're here. Can you tell the good people what you like about Leonard for Success before we close off?
Absolutely. Well, again, it's all the connections, right? What, you know, amongst all those connections and those free networking events, I got to say that this here is, first of all, it's a learning experience, right? These interviews and this type of thing for me is I've done it so many times live, right? But you always have the technical issues, and
Yeah.
I gotta admit, when I started doing this, I had no idea what I was doing. I had to ask Erika, okay, well, how do we do this? How do I do this? Uh, how do you go live on Facebook and that? And I've learned so much through this, as well as being able to, have people ask me questions, all the wonderful people that are at Landed for Success. And, like Samantha, Gordon, Jay, everybody, it's like a big family, and we're all trying to help each other out. So, guys, for $100, even after the first 200, $100 a year is, are you serious? It's like, it costs you that much for a tank of gas, depending on, how fast you go and how much you spend your gas. But 2 tanks of gas, really?
Yeah.
For all the connections and whenever you go onto a networking, I get a few individuals that say, hey, let's get together, let's meet. I'm meeting with Akil, a second meeting with Akil. We're going to discuss ways that we can work together, right?
Mm-hmm.
Again, that comment from Kelly, right? you gotta, you can have great ideas, but you need to bounce things off of other people
Yeah.
to see, okay, well, and then you got to find out, okay, well, can we help each other out? Like,
Yes.
Akil and myself, we have two totally different businesses.
Mm-hmm.
There's similarities.
Yes.
So can we go and look at an international market together and say,
Mm-hmm.
okay, this is our product.
What you can create. Just that's the beautiful thing about networking. And I often tell people, when you attend events, don't necessarily go with what you're going to get. Go with the intention on what you can give. And 9 times out of 10, you're going to hear someone's 30-second elevator pitch, and you're going to be thinking, oh, I know someone that I should connect that person to. And that's how everything starts. And once you learn the importance of serving others, everything else for you just happens organically. And so, Mr. Gallant, I'm so happy to spend this time with you. Once again, you and I can talk forever. And we do have to do that
You do.
PJ. Yeah, we have to do the PJ thing, that PJ show that you talked about. The most important thing that I want everyone to leave with here is 80% of success is showing up. So we will see you at our free online networking event where you get to promote your business for free in the comfort of your home, wherever you reside. Dress up from the waist up and just show up. Come and meet some amazing individuals. It's taking place on October the 29th, 7 p.m. Eastern Standard Time till 9 p.m. And it's a free event. You'll get to hear some inspiring stories, a little snippet from some of the co-authors that will be in the upcoming book. And you'll also get to hear in more detail some of the gifting sponsors who have such a big heart and want to make sure that all of you have some fun during all of the sessions where you get a chance to win some amazing prizes. Who doesn't like to win prizes and do some shopping at the same time? I mean, in your house, no driving anywhere, no long lineups at the washroom. It's just crazy to me. I love it. So everybody, for now, we're going to say bye-bye and enjoy the rest of your Tuesday.
Thank you.
www.Leonard for Success. Perfect, Pierre. That was amazing.